My name is Benjamin Graham. I have spent many years observing how people approach the question of building wealth. Most believe it requires exceptional timing, unusual intelligence, or access to privileged information. In my experience, this is not so. Wealth is built through temperament, discipline, and adherence to sound principles. If I were asked to begin again today with no capital at all, my approach would be straightforward, perhaps even dull by modern standards, but I believe it would work. Before one can invest, one must have something to invest. This may seem obvious, yet it is often forgotten. The first task is not to find the perfect stock or the most promising opportunity. The first task is to develop the ability to save. This means stable income. It means avoiding debt that serves no productive purpose. It means living somewhat below one's means, not at their edge. Without savings, there can be no investment. Without stability, there can be no patience. And patience, I assure you, is essential. The first dollars saved should not be directed toward profit. They should be set aside for protection. Unexpected expenses are not rare. They are inevitable. The timing is uncertain, but the event is not. A modest reserve prevents the need to sell investments at the wrong time. Forced selling is one of the great enemies of the intelligent investor. I would recommend keeping a small cushion in cash or equivalents before attempting to purchase anything in the market. This is not exciting advice, but it is practical. When one begins with little capital, the urge to take large risks becomes very strong. Promises of rapid gains are appealing. The desire to catch up quickly feels reasonable, but speculation does not become safer simply because one has less money. In fact, the reverse is true. A small loss is far more damaging when capital is limited. I have seen many people destroy their financial futures chasing what they believe to be extraordinary opportunities. I would avoid rumors, predictions, and fashionable trends. I would ignore those who claim to know what the market will do next week or next month. Wealth grows steadily over time. It does not appear suddenly. Once I had accumulated some savings, I would not attempt to outsmart the market. I would prefer broad participation in sound enterprises rather than concentrated wagers on uncertain outcomes. Diversification is often misunderstood. It is not a confession of ignorance. It is a recognition of uncertainty. No one knows which individual companies will thrive and which will falter. But over time, productive enterprises as a whole have provided reliable returns to patient owners. I would invest simply and broadly. I would not concern myself with beating the market. I would concern myself with participating in it sensibly. Markets fluctuate constantly. Prices fall when the news is alarming. They rise when optimism returns. Starting with little capital does not shield one from these emotional tests. If anything, it makes them more intense. The investor who learns to remain calm when others are frightened gains an advantage far greater than superior intellect. I have observed that temperament matters more than intelligence in investing. The ability to control one's emotions, to resist the crowd, to think independently without arrogance, these qualities are rare. They are also far more valuable than any analytical technique. The greatest ally of the investor who begins with little is time. Compounding does not require brilliance. It requires consistency. Small amounts, invested regularly and left undisturbed, can achieve results that speculation rarely matches. This is not a dramatic process. It is a quiet one. But over the course of years and decades, The results speak for themselves. I would not search for shortcuts. I would let time do the work. If I were required to begin again with nothing, I would not seek extraordinary opportunities. I would rely on ordinary discipline. I would earn steadily. I would save consistently. I would invest prudently, and I would remain patient when others were not. These principles are not exciting. They do not promise quick riches, but they are effective. They have been effective for generations. I see no reason they would not remain so. The world may change in many ways. Technology advances, markets evolve, but investor behavior remains remarkably constant. Fear and greed continue to drive prices to extremes. Impatience continues to lead people astray. Those who master their emotions and follow sound principles stand the best chance of lasting success. This is not a matter of opinion. It is a matter of observation. I offer this discussion for educational purposes only. It is not a recommendation for any particular investment. It is simply a reflection on principles I have found useful. Thank you for your attention.